Welcome to Markets Now. I'm Michelle Rourke with Allison Thompson with the Money Farm. Well, seeing a lot of red on the board initially this morning, with the exception of the hog market, which has come back. But Allison, let's talk about the grain trade. Where's the pressure coming from? Is this kind of maybe some realization after the USDA reports of what the reality is?
Yeah, I think so. Yep. Last week we obviously had a big report right before a 3-day weekend. So the trade has had a little bit more time to digest those numbers and think about what that means going forward. So it was a supportive report, especially on the corn side. More soybeans and wheat were definitely a little bit more neutral. Didn't see the big reaction that we did. But now today we're seeing a reversal of that. We're seeing corn trading lower, soybeans trading slightly higher, and we're getting wheat to trade lower here this morning. So I think it is some digesting of that report. Like I said, we came in with 90 million acres of corn. I do think that maybe that's on the downside, and I think the trade's starting to believe that as well. And again, across principal acres, we were 6 million acres lower than last year. So there's a good chance that we find those acres at some point during the growing season. And I think corn has a good capability to get acres back. So with that being said, this could be the low end of the acre number for corn going forward.
Yeah, and we're still trying to figure out, if you lost 6.4 million acres of principal crops, where did all those go?
Exactly. And again, that includes all the specialties and things like that too. So we know that they're included in the piece of the pie. I guess I was thinking even up here, especially with the way prices have been, and talking to a lot of producers, we are seeing more of that come into the mix this year. And maybe the USDA is just being a little bit slow on accounting for that, and normally they stick to rotation things, but we could see that definitely shift going forward. But again, who knows where those 6 million acres went? Some of it did go to CRP. We did see that increase this last year. We know cotton picked up a few more acres, but there's still a decent amount missing. So chances are pretty good that we're going to see that come back into production here at some point during the year, especially if we're not dealing with any PP issues.
Yeah, and that may show up on the June report then?
Right. We'd have to wait till June. So we got a couple of months. We're going to still be debating acres, and obviously production is going to be the next thing on the trade's mind.
Yeah. Okay. And when you add everything up, even 90 million acres, we still, even if you have a trend line or below yield, you're going to be over 2 billion bushels ending stocks, right?
Correct. We're still going to be sitting over 2. So the trade knows that's a comfortable number. That's where we've been all this year, and look what it's done to prices. So I have a feeling that, yes, we're still sitting comfortably with some higher stock numbers. Now, we did get a good number for stocks from corn on the quarterly endings or quarterly stocks report. Excuse me, this last week. So we should see some adjustments there. But again, I think the market has that factored in. We know exports have been running very well. So again, it wasn't a whole lot of fresh news, honestly, for the trade to really keep momentum going higher.
Yeah. The one thing I want to ask you, because of where you're located up in the Northern Plains, we did see this increase in spring wheat acres. Is that believable at this point? I know some of it probably did come from Durham too, right?
Correct. And Durham didn't surprise me to see the higher Durham acres. Guys have been able to contract really good prices for Durham. So honestly, wasn't surprised there, but spring wheat came in quite a bit higher. But again, it goes back to when this report was out. We were looking at a lot of different spring wheat prices then too. Now it doesn't look so good. We're making new lows here this morning. So it definitely changes that picture. Yes, I could see some guys planting some more wheat acres if we do have an early spring, but given just where corn's at competitively, I could see more corn acres go in. So I have a hard time believing that we're going to see this much and actually see an increase in spring wheat acres this year. I think there too, if spring wheat really does want acres, we're going to have to see it compete. But today might be a tough day to do it, just with the other wheat exchanges being down ahead of our crop conditions report this afternoon.
I was going to ask you, do you anticipate, or is the market anticipating we're going to see much better conditions over a year ago? Is that where the pressure's coming from?
Yep, absolutely. We know that the crop went in on good condition, and those state reports that have been coming out pretty weekly here, they've been showing really good condition ratings. So, and I have a hard time seeing that not following through with today's first USDA spring crop conditions report. So it is kind of a highly anticipated one, always kind of is, on what the market's thinking they're going to see there. But ultimately, it went into dormancy really good. A lot of the crops out of dormancy now. We're not seeing a whole lot of weather scare either for the winter wheat crop. They're getting some good moisture. So all those things combined, we should be looking at a good crop condition report, not necessarily friendly for our wheat exchanges today. But yeah, we have Kansas City front months down about 20 cents, and Chicago and Minneapolis are down 10. So that is going to be a tough one. But if we get any kind of surprises in those weekly reports, it's definitely going to be something the market's going to be paying a lot more attention to moving forward.
Yeah, no doubt. So we are starting a new quarter. We're starting a new month. Is money flow, an issue today in terms of fund positions or jockeying of positions at all?
Yeah, well, it's definitely going to be something we're going to keep an eye on still. We're still sitting on some pretty large net short positions across all the grains. And honestly, we did see some buying on Friday, especially in the corn, but they're still going to be sitting on a large net short. So unless we start seeing that change, it's going to be hard for the market to really rally above some pretty key points. So, and honestly, it's just going to continue to come down to a weather market for corn, soybeans, and wheat. We need some kind of a weather story, supply, scared to really start them moving. And outside markets haven't given us a whole lot of movement here either. So we're just kind of waiting. It's been a waiting game for the last few months. And until we get into the growing season and get planting rolling around, which looks like it's going to be off to a good start, we're just kind of waiting. And I think the funds will hold on to those short positions and continue, selling rallies and doing some short covering here until they see something to absolutely spook them out of their shorts.
Yeah. So speaking of spooking out of their shorts, we have high path avian influenza now that's been confirmed in dairy herds. It looks like it's spreading. Is the corn market, maybe even the soybean meal market, reacting to that at all today or not?
It definitely could be. I mean, we'll have to see where it progresses. If it gets into the beef herd, that might have more of an impact and onto our grains as well. But honestly, anything like that's a black swan event. So you just never know how markets are actually going to react to it. So yeah, we could be getting some spillover pressure from it, especially if it's spreading. Obviously, it doesn't go well for cattle numbers, but obviously that does hurt our feed demand as well. So we could, if it does continue, we could definitely see adjustments by the USDA for some of their usage. It's all speculation at this point.
Yeah. Do you think the cattle market being down and hogs being up today, is that a reflection of HPAI as well, or reaction to it?
It seems like it does, or some reversing of their spreading action as well. So kind of weird, especially following that hogs and pigs report last week, to start seeing some of that. Not exactly what we thought would be happening today. So I would say some of those developments over the weekend definitely played in today's action.
Yeah, absolutely. Because I don't think the hogs and pigs report really on face value looked like it was bullish. It looked bearish, didn't it?
It did. It did. It definitely had a bearish tilt on it. And it's just crazy what that industry is able to do. Um, 11 pigs per sow is just insane. That industry is definitely booming and has taken it a long way. And so they're definitely sitting in a different spot than they have been in the past. And the market is aware of it as well. So we just need to see where it goes from here, honestly. But yeah, prices didn't are reflecting that here this morning.
Yeah. Well, hopefully we'll have better clarity as the day goes on. All right. Thanks for joining us, Allison Thompson with the Money Farm, that is Markets Now.